What's up everybody, and welcome to another video. And in this video we're going to be going over a deep analysis of Realty Income Corporation, ticker O, one of the most well-known and one of my favorite dividend stocks. They're a monthly paying REIT. A REIT is a real estate investment trust, in case you did not know that, and I believe the future for this company is very well. So before I do go any further, I'll ask that if you do enjoy this video, make sure to subscribe to this channel and turn on those post notifications for videos on dividend stocks I'm buying, selling. I'm going over portfolio reviews, doing all that stuff, being as transparent as I can with you guys, telling you stocks that I'm buying or selling. So make sure you subscribe because you're not going to want to miss out on that information. But let's get into the video nonetheless. So as we said, we're looking at Realty Income, ticker symbol O. They currently trade for $69.66 per share, and they are up 15.31% over the past year. Year to date, we are up 12.05%. Now, this company is very profitable with a very bright future ahead of themselves. First thing I want to point out that I think is very interesting is they currently have a $27.16 billion market cap. Now, what we can do is go look on their current total PowerPoint presentation for this company, and what you'll come to notice is it says they have an enterprise value of $34 billion. What does that symbolize? It symbolizes that currently Realty Income is undervalued at the moment, and I strongly believe that soon in the market, within the next year or so, we will see this company reach that market cap that it deserves to be at. Now, when we go look at the company's 5-year analyst, you can see it did have a dip back in whenever COVID happened. It was trading at $82 a share, and then it fell all the way down to $43 per share. They are making a steady recovery, and the financials are looking very solid. But let's look at some more stuff from Realty Income, and we'll talk about this later in the video. So currently, Realty Income has a dividend yield of 4.07%, paying out $2.83 per share, and they pay out these dividends on a monthly frequency. They right now have a dividend growth of 24 years. Give it one more year less than that, and this company will be qualified as a dividend aristocrat, which means they've been growing and paying these dividends consistently for at least 25 years. Every year, on an average 5-year growth rate, you're getting increased dividends by 3.54%, which is amazing. It's like getting a 3.54% raise every single year. They have a nice conservative payout ratio for a real estate investment trust at 81.82%. If you want to buy this dividend stock, I would recommend buying it before November 1st of 2021, so that you'll get paid out on November 15th of 2021 and get that dividend. It'll be worth 24 cents per share. Looking on towards some more stuff, this company, everybody believes that Realty Income has nice potential and that people are bullish on the stock. Currently has a target price of $77.65 per share for a 1-year analyst catalyst, and what you'll see right here is the same thing. Fell down, but we have big potential, and our target price is upwards of 20.33% on the next year. Here's some news articles coming out about Realty Income, why people believe this dividend stock is unlocking more growth. You'll see right here, Realty Income branched out its international presence from the UK to include Spain, so they are innovating and getting more properties under their portfolio. The deal with the grocer Carrefour opens up a nearly $600 billion commercial real estate market, which is huge. We want to see Realty Income because they're a real estate investment trust. They're not a technology company. They're not a company that's innovating necessarily that way. We want to see them expand their portfolio, start bringing in more income so that they can pay out to more of their shareholders, which is Realty Income's pretty much entire goal, is to provide value and bring profits back to shareholders. And at 19 times this year adjusted flow from operations per share guidance, Realty Income is a rare example of quality at a fair price. You always want to see, like the great words of Warren Buffett, you want to buy a great company at a fair price rather than a fair company at a great price. And this is what we're seeing with Realty Income right now. More so to talk about is Realty Income also has one of the strongest balance sheets in the REIT sector. It's only one of the handful of REITs with an A-rated credit, which is incredible. We want to see these companies with good credit show that they can sustain any downfalls in the market that might absolutely happen. Not only that, it has a conservative dividend payout ratio, give it the financial flexibility to make acquisitions and continue to grow the dividend. Right now, Realty Income is on track to buy $4.5 billion of property this year, and they're merging with the fellow REIT in an all-stock deal that will create a top 5 global REIT Not only that, but this merger should boost its annualized cash flow per share by more than 10%. Because of this growth, Realty Income should continue living up to its name by supplying investors with a rising passive income stream. So this is what we always like to see. Looking on kind of just like who Realty Income really is. They're a company that owns a ton of real estate, and they have big clients. Some of their clients are Walmart, LA Fitness. I think McDonald's is even some of them. We'll look onto their biggest partners in a little bit, but they invest in people and places to deliver monthly dividends that increase over time. They're on a vision to be the top 5 US REIT, and we'll see more. We talked about this earlier. They are one of these 65 companies in the elite S&P 500 Dividend Aristocrats Index. They're currently a top 10 global REIT, and for the past ever since 1994, when they listed, they've been having a 15.3% compound annual return and a 4.4 compound annual dividend growth rate, which is incredible. They want to become a $50 billion plus global company. What are they at right now? $27.16 billion with an enterprise value of $34 billion. Looking on some more stuff, they're in a $12 trillion market, which is huge. So we always see this, and to continue treating the dividend as sacrosanct to our mission. We love that. We love seeing that they want to do this and keep increasing that dividend to their shareholders. Looking on more stuff, we can see they're an A3, A- credit ratings by Moody's and S&P, which is very difficult and very rare in the real estate investment trust industry. They right now have 6,761 commercial real estate properties in 52 years of operating history. Roughly 50% of rent from investment grade clients, which are pretty much the clients who are very top tier, don't miss out on payments, and big potential. And right here we can see is roughly 96% of their total rent is resilient to economic downturns, which we always like to see. They right now have 613 monthly dividends declared, 95 consecutive quarterly increases, and I don't see them slowing that down anytime soon. Here is just a little bit more to look at. We can see they have 98.5% of their portfolio is currently occupied, which means that they're not really just wasting money on properties that are not generating cash flow. 98.5% of everything they own is generating cash flow, which is an incredible thing to see. They have over 6,700 commercial properties, 630 different clients, 58 industries, located in all 50 states, Puerto Rico, and the UK, and it looks like they're coming into Spain too. Here are some of their top 20 clients. We got 7-Eleven, Walgreens, LA Fitness, AMC Theaters, Walmart. Big things are happening for this company. You can see Home Depot, Kroger, BJ's Wholesale Clubs, Lifetime Fitness. So this is a big portfolio, and they have people who are credible enough to pay them. Looking on some more stuff, their total, how much they get paid, they are currently getting about roughly 95.9% of payments from their investment grade clients. They're getting paid 100%. The only thing that does keep me a little bit like on my eyes is the contractual rent collected from their theater clients is 38.3% for the quarter ended June 30 of 2021. But as we see, for the month ended, it was 51%. So it seems like it's slowly increasing. But these financials are looking very solid. They raised $475.5 million from the sale of common stock. And you can see in the total month of June, they raised $594 million in net proceeds from a common stock public offering of 9.2 million shares. Net income per share was 33 cents per share. And looking on more stuff that we talked about, things that we already talked, 15.1% compound annual growth rate and 615 consecutive monthly dividends paid. Now, looking on their financial statement, total revenue continues to increase year over year, which we like to see. And they didn't take a massive hit in 2020 whenever COVID kind of happened. We saw Realty Income, their stock price did fall because almost everybody's stock price did fall. However, the company, 96% of their portfolio is resilient to economic downturn, and their revenue continues to increase. Same thing with their net income. We can see it has fallen for the past trailing 12 months, and I would most likely assume that this is from movie theaters and just a few like Realty Income being like, we know the economic downturn. We'll give you guys a little bit of some slack, and they took some payments away, but they still have continued to increase that dividend, are expanding the company, doing great things. Looking on this balance sheet, total assets is $20.7 billion compared to $9.7 billion in liabilities. Cash flow, the free cash flow continues to increase. We want the cash flow increasing. and that is where the dividends come in. But guys, that's what I have for you in this video. If you did enjoy it, make sure you give this video a thumbs up and you subscribe. You turn on post notifications for daily videos just like this one, and leave a comment down below whether you're going to be buying Realty Income or not. I'll see what you guys are doing, what you guys are thinking. Check out all the links in the description below for free stocks, and you can even see my ETF portfolio. I'm in the process of building a dividend portfolio. It's going to be a big basket of stocks. I'll categorize everything. It'll be amazing. I'm still in the process of building it. It might take me a few days, even a few weeks, but make sure to subscribe so you don't miss out on this portfolio. It's going to be 100% free. But thank you for making it to the end of the video and listening to me, and I'll see you at the next video.